And our live broadcasting as the Caribbean Association of Banks brings to you this evening COVID-19 and the Caribbean banking and financial services sector. This evening we are joined by our esteemed panel, both in person as well as virtually, which is becoming quickly the norm given this pandemic and this crisis. To my right, I'm very pleased to introduce Richard Peterkin. By now, I think most persons would be familiar with the two of us sitting together on this stage. We were here 2 weeks ago. Richard, I'm sure you would like to make a brief introduction.
Thank you, Wendy. Well, pleasure to be here and to help our viewers try and understand what's happening, certainly in the banking industry and other areas that are related. I'm a partner with Graham Thornton and glad to be here to help.
Excellent. Thank you, Richard. To my left, none other than Thaddeus Antoine. I'll hand over to Thaddeus for his own introduction this evening.
Thank you, Wendy. And it's a pleasure for me being here as well. Certainly to add to the panel discussion this evening from a legal perspective of how COVID has really been affecting all of us.
Okay, great. Virtually, we are joined by Christopher Luard. Chris is on the line and able to join us, I'm hopeful. Hi, Trevor. I see Trevor. I'm not sure if we have a live feed of Christopher Luard. Okay, if we have Trevor on, then I will move over to Trevor while we try to ensure that Chris is able to hear us and join us this evening. Trevor? Have we lost our online guests? They're able to hear us? I can't hear. All right, so while we try to work through that, let me take you through the reason why we're here this evening. Tonight's discussion, like we said, really is to address the issue of COVID and the implications that it's been having on the financial services sector and the banking sector in general. And we know that there's been a lot of questions floating around, and what we have done as the Caribbean Association of Banks really has been to scour social media to see if we can pinpoint some of those critical questions that the audience is asking, and to see whether or not we are able to address those questions and bring some clarity to everyone, not only in St. Lucia, but certainly across the Caribbean and perhaps even the wider region as you tune in this evening. So I know that the banking sector perhaps has been able to jump in and address some of the concerns, but I think to kick off this evening and noting that we are joined by Michael Spencer in Antigua. Michael is the president of the ECCU Bankers Association. I would like to begin this with so Michael, let's see if we can address one of the burning questions that seems to be a recurring one, and it is in the midst of this global pandemic. What is the role of banks, especially indigenous banks, in small island developing states, as opposed to larger, more prosperous jurisdictions? Are we able to get Michael on? No? Okay. Okay, let's see if Michael is... Michael, perhaps you can try seeing whether or not there's a mute button that will allow you to come through. Let's just test that. Nothing still? Okay, so let's move on to our live panelists this evening. Guys, I was hoping that I could give you a moment's break here, but let's keep it moving and we'll chime back into our other participants shortly. Perhaps I can start with Richard. Richard, we have been, by and large, across the region working from home. Let's start with a softer one. What has your experience been? What do you believe will be the challenges that we face, or the opportunities, I think, as we've been transitioning in large measure, not only the banking sector, but generally speaking, to a work from home environment?
It's been amazingly good, better than our wildest expectation, because when this first started with the curfew, and we kind of saw it coming, we had plans as to how we were going to work from home. We made sure that we had the necessary technology that would allow us to do so. Clearly there were some admin people that had pretty much nothing to do at home, but for the entire 8 weeks now almost. They've been working at home. We've been getting work done. We've been getting billings out. They've been meeting regularly. My daughter, who lives with me is and works with us, I hear her every day in a Zoom meeting with clients. And and the only thing that they are missing is the occasional face-to-face when they have to go to client. So now that we're getting hopefully close to reopening, accountants are still not essential in St. Lucia for some strange reason. But when I talked to my partners about it a couple of days ago, and I said, well, okay, when they give us a green light, what's going to happen? And basically they said, well, there's no need for everybody to come in. Maybe a couple can come in. Maybe we'll give them the option. But we know that long term, this is going to change the way we work.
Absolutely.
And I can see more and more flexible hours, people working at home. Clearly, there's some young women, particularly those with children, that are having some issues. But by the vast majority, as essentially being very productive, and we're thinking this is an eye opener, to be quite honest.
Yes. Yeah, oftentimes it's in the face of crisis that we recommend, or we realize just how resilient we truly can be in adopting these things. Thaddeus, you and I were having a brief discussion before we went into production this evening, and you were talking a little bit about your own experience with working from home and managing your office. What has the experience been like for you?
Well, COVID-19 has certainly brought us to an inflection point. So what we found is that, particularly in the legal sector, the courts have all gone virtual at this time.
Wow.
So I found myself working from home, attending court from home, and I must say it's very exciting. It's very exciting. The only thing we certainly can't continue that way, particularly in criminal cases, because there must be open justice.
Right.
So the court must be an open forum that any person could come into the court and listen to what's happening. But it has worked very well, and I think at some point we should continue using a virtual system. I could see cost savings even for the court system, where we could have specialized judges do particularly constitutional administrative matters, or even selected commercial matters from a virtual position. So you need not put a judge in every island of the OECS, but have a judge, one specialized judge in one location to allow for such business.
Absolutely. Richard, you made the point about young mothers. I don't in any way, shape or form ascribe to be that, but it certainly has been very interesting bringing my work life into the children's home. They have gotten very involved, which I think for the most part, initially we would have thought, this is taboo, that the children should not be seen and they should not be heard and they should not be part of grown-up discussions. But I think really and truly the children feed off our own emotions. So if we're adopting or adapting to technology from a standpoint of fear or a hands-off sort of thing, then the children are likely to do the same. But even my own 3 children have moved to virtual learning, and they have transitioned really very well.
Yes.
But balancing the two can definitely be a challenge. I'm getting the green light that Michael has been able to join us. Michael, are you on? We're still challenged? Okay, so Thaddeus, we'll move to you then with one of these questions before we bat over to Michael again. And for you, one of the burning questions has been around moratoriums, and I'm sure that the viewership would now realize that this is really heavily weighted towards the banking sector and how everything else is impacted by. In terms of moratoriums, we've heard a lot about the impact of moratoriums.
Yes.
Hi. Hi, Michael.
We can hear him.
We can hear you, Michael, but you're not able to hear us. Is that what's happening? Okay, so to our technical team, it looks like we're having some challenges on Michael's end. But going back to you, Thaddeus, then the question of moratoriums and the legal implications of moratoriums. What do you think are some of the things that the viewership, the ordinary man, needs to know about moratoriums from a legal perspective? And what sort of guidance would you need to give to the banking sector to ensure that coming out of COVID, customers are well prepared for what is to come from a moratorium perspective?
The moratorium is good and it's bad. I'm putting it very lightly. And we must commend the banks. You don't often associate magnanimous with a bank, but the banks have certainly been magnanimous in offering moratorium, and in some cases 3 to 6 months. I would say that the options being offered are good options, but still the customer has to be very wary of a moratorium, because moratorium is not a waiver.
Correct.
It's not a case of you owe $1,000 today and next 6 months you still owe $1,000. It is a case where the principal and interest is being deferred. So I would urge a customer, if you can, you have the cash flow, you can afford it, to at least pay the interest on the loan.
Okay.
Keep it going. Because your option at the end of the moratorium is either to capitalize the interest, and that means adding the interest to the existing principal. In some cases, I've heard some banks indicate that they would create a separate loan with the interest
Right.
to run, but still another interest. They would also extend the period of the loan, but in doing all of that, it's going to be more costly for the customer. Now, people say, but why doesn't the bank just waive the period? But people must bear in mind that the bank is a business, the bank has shareholders, the bank has staff, it has capital assets, and they all need to be paid for. And the bank is on lending depositors' funds. That's how it makes its money.
Okay.
So it just can't be out there waiving interest and waiving principal because it'll go bankrupt.
Okay. And what about from the banking perspective? What is it that the bank needs to ensure is done from a legal perspective to cover themselves, basically, to say that the customer has had this discussion with their banking representative and they're fully aware of the options, etc., etc.? Is there a new document that needs to be signed?
Absolutely. Because essentially, with the moratorium, you would essentially have to restructure the loan.
Okay.
And any restructuring of the loan has to have a new commitment letter. In some cases, your bill of sales normally run for a period of 5 years. So you need to extend the bill of sale for another 5 years to cover the period of the loan, because most loans, vehicle loans now, are over 5 years. You have issues of promissory notes, which has a maturity date. That has to be addressed as well. You have issues of co-borrowers, but you need the consent of all the parties to the loan to grant a moratorium.
Right.
And if one party just says, no, I'm not in favor of the moratorium, then the bank cannot grant a moratorium. So all those implications are looked at as well. The bank also has to look at issues of defaulters and whether or not the bank has already demanded that loan. Because if the bank has already demanded that loan, how do you go about restructuring that loan now? Because there's a limited period, a prescription period, as to when you could no longer go after that debt. So all of that has to be borne in mind when the bank is sorting this out.
Okay. So I believe that we can actually introduce Michael Spencer. Michael, are you able to hear me? And am I able to hear you? Let's test this.
We are hearing each other. I can hear you.
Can you hear Michael? Okay,
Yes, I
so, all right, so Michael, I'm going to fly a little bit blind because I can't hear you, so I'll read your lips. That's one of my hidden talents.
Okay.
So let's go again to the first question, and then we will come back to the response that Thaddeus just gave and try to create that link for our viewership. In the first instance, let's start with this question. What is the role of banks, particularly amidst a crisis like this, for economies of our size, for the banking sector primarily being made up now or constituted of indigenous banks, which are not as large and expansive, deep pockets as our international partners would have been, and certainly in context of the international or the global scale and what the banks there have to offer?
Right. Well, thank you for the question, Wendy. Firstly, let me say good evening to all of your viewers and to my colleague panelists. We do appreciate the opportunity. I do appreciate the opportunity to participate in this discussion, this very important discussion this evening. The question surrounds the role of banks, especially the indigenous banks. And the banks really have always played a significant role in the economic life within the jurisdictions that we operate in. Regardless of this global pandemic. We have remained committed to being the reliable source of finance for traders, for businesses and local agriculturalists, as well as small industrialists and personal consumers as well. And we recognize that such support is needed in a non-diversified economies such as ours. The indigenous as well as the international banks are tuned to the economic vibrations within the islands and have an extreme allegiance to customers. Our interest is vested in our customers and the communities that we serve, as well as our staff, as our staff are often a major employer of local talent. So as we go through this pandemic, we recognize that we have an extremely important role to play. Firstly, in terms of continuing to protect the depositors' interests, as that is a main role of banks. We also have a role to play in ensuring that persons continue to have access to their funds and to critical services. And that would have been evident in the recent shutdown across all of the ECCU countries. We also have a role to continue to financially support persons who are in need at this time, and that support comes in the form of, if not, short-term facilities to see them through, but also in the form of the moratoriums, which I'm sure we'll get into a little later, which really provides a relief to persons who would have otherwise had loan obligations to satisfy.
Thank you so much for that, Michael. And yes, you actually walked yourself right into the next question, so thank you for that. Before we were able to get you or to hear you, we had actually bowled that question across to Thaddeus in terms of the legal implications of moratoriums. So now I'd like to ask, from the banking perspective, that you elaborate a little bit more on what the strategy has been from the banking perspective to assist during this period of COVID in ensuring that our mutual clients across the board have an opportunity to manage their finances and to address this, this pandemic as we move forward.
Right. So all of the banks across the ECCU currency union would have recognized at the onset of the crisis that we were certainly entering an unprecedented period in the history of the region, and in fact the history of the world, as we grappled with the incoming effects of the global pandemic, the COVID-19 pandemic. So we would have started to consider ways that we would have had to support our customers across the ECCU, and together as a group, all of the associations across the national, all of the national associations across the various countries would have met and agreed that we would need, in the first instance, to offer moratoriums to all of our customers. We then collaborated with our regulators, the Eastern Caribbean Central Bank, and we had agreed some preliminary and outline parameters within which we would have offered those moratoriums. And I think it is right to know there that moratoriums would have been granted to customers for a period of 3 to 6 months. That's not really essentially defers for a specific period of time the legal obligation of the client to pay the debt. The deferral, could be granted on the payment of principal. So by this, the debtor is obligated to continue the interest payments only, or the deferral could be granted on both interest and principal payments, in which case they would not have to pay either. Now, different banks have had different approaches to this. Some banks would have applied the moratorium across the board to all customers. Others would have required customers to approach the bank with the request. Some would have required customers to opt in or opt out of the request, but by and large, all banks had it available to all of their customers and all of their customers who were in good standing. Because if you were at that time what we call a non-performing customer, meaning that you were in arrears in excess of 90 days, you would not have been eligible. So with that, different banks obviously would have had a different approach in terms of its implementation. But essentially, we would have also taken the opportunity to explain to clients, as they would have approached the banks, as to the different options that were available to them, the implications of the different options, because the accrued interest, as I heard my colleague panelist, Mr. Antoine, indicate, the accrued interest would still be due at the end of the moratorium period, and that interest would be factored into the loan going forward. Individual banks would work with their clients. We recognize that it is a challenging time for all, and we have a role to play, and we are focused on ensuring that our clients are in no worse a position than pre-COVID. So essentially, this deferral of principal and interest payments for clients would afford them the opportunity to have some form of relief so that they can meet other more critical expenses at the time, And then at the end of the deferred period, there'll be a discussion to understand the current status of the client, and then a payment, would be agreed going forward. Some banks may have already indicated to the clients what that payment will be at this point in time, but as we do not at this point know the extent of the crisis and whether or not a further extension would be required. So at the end of the period, there will be an assessment done based on the current financial position of the borrower to arrive at something that is comfortable, certainly with a payment that perhaps the person might have had before, so that the person's obligations could be met going forward. Now, the moratorium situation differs by client. Some clients may have opted to continue to pay the interest only, so that accrued interest does not have to be dealt with at the end of the period. Some may have opted to have both principal and interest deferred, and depending on what their circumstance was at the time, some clients may have already been paying ahead in terms of their loans. They may have been on the mark. It just depends on the circumstance that they may have a higher or lower or a similar repayment going forward. But the focus at the end of the period will be to ensure that the client continues to have the payment that they would have had prior to the COVID. Obviously, some other factors may need to be taken into consideration. And in order to do that, it may necessitate banks agreeing to a further extension. And that, that will be assessed at the time, because we are here to work with our clients. All of the banks are focused, committed to working with the clients on an individual level to ensure their needs are met based on their circumstance at the time. So, there are different approaches. Different clients would have reached out to their customers in different ways, whether through emails or via their website in the newspapers, and all of the officers, stand ready to assist clients as they work through this challenging period for all of us.
Okay, great. Thank you so much for that, Michael. I know that there's a gentleman who's been waiting patiently for his opportunity to speak, and so Chris, we are coming to you hot and heavy. And we know also that one of the questions has been, why are the banks not able to do more? And perhaps to put some context between the banks and the Eastern Caribbean Central Bank, the question then to you becomes, what is the role of the ECCB in terms of how it works with the regional financial sector in managing situations like this? How does the ECCB facilitate movement or the banks being able to step in and do more?
Thank you, Wendy. Appreciate the opportunity to be here this evening. Thank you very much for having me. Specifically as it relates to the role of the ECCB, it fits nicely into our main purposes. I think our role can be captured in three main areas. It's to maintain financial stability, and by this we mean that ensure that there is a sound and safe and sound banking system. So having had the pandemic and the impact of the pandemic, our role as a central bank is to ensure that the banking system remains stable and the financial system by extension. One of the things we also look at as it relates to the maintenance of financial stability is to ensure that the payment system is functional and that payments continue to be made and that they're made on time and that we facilitate that entire process. I think many of us throughout the currency union can say that although we've had the shutdowns of our economies and that we've been working from home, banks have had to curtail their hours. I think it has worked well in terms of the functioning of the payment system, that we continue to facilitate all our payments and the like. Those of us that get paid electronically via EFT, and those means continue to get paid. The second area in terms of our role is to maintain the stability of the Eastern Caribbean dollar. So it's really the exchange rate stability. The central bank must safeguard the value of the EC dollar in terms of what we will be able to purchase here at home and in exchange for other currency. So essentially is that role in terms of price stability. We must ensure that there is price stability. One of the things that we look at as we look at the stability of the EC dollar is given the small size and openness of the economies of our member countries, our main role is that we've pursued the objective of price stability. And we maintain, as many of you know, a fixed exchange rate or peg to the US dollar that has been $1 to 2.7, $2.70 EC dollar since July of 1976. That remains. So our currency remains tremendously backed. In fact, as of last Friday, our backing ratio, which is an indication of how well or the strength of the EC dollar, was at 98%. So our currency is very well backed. And thirdly, in terms of our role, is to provide assistance to our member governments. And this can be in the form of policy advice or even in terms of loans. So that's in a nutshell, the three main areas in terms of our roles in this scenario: the maintenance of financial stability, the maintenance of the stability of our exchange rate, and to provide assistance to our member governments.
Thank you, Chris. You're not going to be let off the hook just yet, and you kind of, open the door, so I'll walk through. Allowances and legislative measures are being put in place by governments and central banks to protect against the reoccurrence of what we are seeing with COVID-19. There is a trend of thought that there was complete lack of preparation, and I dare say that that would have been the case globally, as you don't plan for things like this. But what can we learn from this experience to guide us going forward?
I think, Wendy, I want to go back to something. I think Thaddeus mentioned this and Michael mentioned this as well. What we are seeing today as a result of COVID-19 is unprecedented, whether here in the currency union or throughout the Caribbean or even globally. I don't think 12 months ago that there was any one of us who would have predicted that our economies or economic activity would have come to a standstill. And mainly as a result of our government shutting down our economies to protect life. So I think we have to put it in that context. Everything that we are seeing as it relates to COVID-19 pandemic, it's unprecedented. That being said, however, I think one of the things that we need to do to protect ourselves is that the government must continue to build resilience in order to safeguard against extreme events. So whether these extreme events are pandemics such as COVID-19 or climate events that we are seeing more and more in terms of hurricanes, the extreme hurricanes that we saw in 2017. And firstly, one of the things that we have to do is to build fiscal resilience. And that just simply means saving for a rainy day. It's something that we've heard throughout our lives from our grandmothers, our parents, our grandfathers, that you have to set something aside for a rainy day. That doesn't just apply to the household or to the individual. It extends to the governments and to businesses and corporates as well. In that we must build fiscal resilience, set aside some funds for the rainy day. Secondly, we have to ensure that we can cope with diseases such as COVID-19. One key particular area, and I think this is even more critical now from what we've seen globally and in the Caribbean, we must build psychological and mental resilience. Fortunately, over the last, and we know in the Caribbean, mental health is not something in probably 20 years, 25 years ago that we paid much attention to. But fortunately, within the last probably 10 years or so, there's been significant improvement in our attitudes towards mental health. So we must build psychological and mental resilience by putting the systems in place to help our citizens to cope with economic shocks and crisis. Third, there must be a transformation of our economies. And this has to be done through the diversification of economic activity, income streams. In the currency union, we talk about digital transformation. We are looking at things like upgrading our payment system, the use of our electronic funds transfer option, the investment and the research that we are doing on our digital EC dollar project and so on. Fourth, in terms of building resilience, we must harden our infrastructure. So we're talking about buildings that can withstand Category 4 and Category 5 hurricanes. We must explore and invest in renewable energy sources such as solar, wind, thermal. One of the key issues, even as it relates to climate events, and that we are seeing that we have to do across the currency union, is something as simple, perhaps a significant investment, but underground cabling of our electric lines and our cable lines and so on, so that if we have a hurricane, so that our resilience and when we recuperate from the hurricane, if all of our lines are buried on the ground, there's not an issue of poles being blown down and you have to go and run all those lines. So it's a hardening of our infrastructure. Fifth, we must reduce our inefficiencies in doing business. And for example, we must reduce the time it takes for the transfer of property titles. We must implement a legal framework for business and company restructuring in terms of our bankruptcy legislation, and perhaps Thaddeus can speak some more about that. And sixth and finally, we must invest in insurance, both at the country level, at the household level, in terms of purchasing insurance coverage to protect us in terms of these events. There is what we call a Caribbean catastrophe risk insurance facility, where many of our Caribbean member governments, there's a facility where you can purchase insurance to cover against the impact of hurricanes, earthquake, excess rainfall. So in a nutshell, Wendy, what we have to do to protect ourselves is to build resilience in many of those areas that I've outlined.
Thank you so much for that, Chris. You certainly brought quite a number of points that we would need to elaborate a little bit more on. And for our viewing public, I want to say that we are placing a little bit of focus on our gentlemen who are joining us from virtual perspective, noting that we tend to have some instability and we may not have them with us for very long. I'm sure that Richard and Thaddeus can do with a little break until we get to them. So, Chris, you alluded to the digital currency and the fact that this is part of the resilience strategy that we need to be very cognizant of. So I'm going to actually include here a question from our Facebook audience. And we're looking for an update on the ECCB digital currency and the potential impact that it may have had at a period like this during COVID-19. Could this have been a situation where we would have had less of an impact on the financial sector had this already been up and running?
Well, thank you. In terms of where we are, so the project continues. So we're still doing work. Clearly, there's been some delays in terms of what has happened, in terms of the shutdown in our economies or working from home. But we continue apace in terms of getting that project afoot. So we're still looking at having our testing of the project sometime from June to September of this year. So those are the timelines that we're still working with our banks, with our partners, in terms of having that in place. In terms of the digital currency, one of the key things is it relates to the closure of our banks. So many of our customers, they used to go into the banking halls to make requests for transfer of funds and so on. So in addition to the electronic funds transfer service that's available in the automated clearinghouse, one of the options of the digital currency would allow me, if I'm in St. Kitts and I want to transfer funds to Michael, for instance, in Antigua, it would allow me within that platform of the digital currency to easily transfer funds peer-to-peer from myself in St. Kitts to Michael in Antigua. It also would cut down in terms of the use of cash. One of the things that we saw coming out, and I believe it came out some of the reports in China, that it may have been a possibility that the virus was being spread by the transmission of or the movement of currency. So clearly, if we had a digital option in terms of there would not have been so much handling of cash and the movement of cash with your retailers and so on, you would have been able to make payments through the digital currency option. So there's some key areas in there that where things would have assisted us more so in terms of our payment system and in terms of facilitate the transaction in our electronic platform.
Okay, excellent. Michael, I'll hand this over to you now. In terms of our readiness as a people and from a cultural perspective, perhaps, can you speak a little bit to the level of penetration of electronic banking and online payment region-wide? And how do you think that this would have affected us in a situation like this?
Thanks for that question, Wendy. A very appropriate one, and one that has been, the focus of attention for all bankers across the ECCO over the past few years. The penetration level for our electronic banking and online payment systems, regrettably, is not where we would like it to be at this time. There has been significant improvement over the past few years, but really where we would like to get to is in the range of 90 to 100%, conversion and penetration levels. We're not quite there yet. I think if we had to do an average across the region, I would say it's about 40 to 50%. And it varies by country, varies by institution. Now, it's interesting you asked the point, you asked Chris a short while ago, what could the digital ECD currency have done, had it been available during the shutdown period. The irony is that we actually did have a number of products on offer that facilitated a lot of the same results that we would have expected from that product. Because we do have our ATM, our debit cards, our credit cards out there. In fact, in most of if not all of the member countries, there are certain critical services that were agreed by all the banks that we would have agreed that we would have continued to offer to the public and our customers. ATM transactions, night wallet processing, online banking, online wires, etc., and EFT payments. So that is something that we are quite proud of. I mean, it did work for the most part across the OECS, whereby we were able to operate remotely without opening our branches. I do believe, however, the issue is really surrounding the cash payments and the amount of cash in our society and the use of cash. And that really reared its head, and it became very obvious that we are still very much a cash-based society. There's still a culture that prefers branch banking and cash-based transactions, where some fear the use of cards and online banking application. During the shutdown, we had said that, well, we could continue to offer our services. You would have had access to your cash. You would have been able to use your debit cards at the supermarkets. You would have been able to do your online transfers. You would have been able to transfer funds from one person to the other. So Chris gave the example of him sending money to me here via the digital currency, but I'm going to return the favor, and I could say that I actually today.
Okay, it looks like we may have lost our online panelists. I'm not sure if we will be able to get them back on before we shut down this evening. But I think now that we can engage our physical panelists and they're ready to go. So Richard, with everything that you've heard this evening coming out of the ECCB and certainly the Bankers Association regionally, what do you think we as a Caribbean people need to do or could have done to be better prepared for the financial crisis that we are clearly facing from a personal perspective and even perhaps from a banking perspective in getting our arms around this?
They could have done. Part of the question is difficult because, as we all know, this is a 100-year type of event, and so I don't think anybody could have seen this coming. We have dealt with hurricanes and other disasters in the past, so there clearly are a lot of things that the financial services industry has been trying to do over the years and has been a little slow in getting it done, such as amalgamation of a lot of the indigenous banks, which is something going all the way back to Dwight Venner had been pushing.
That's right.
And to this day, we see very little of it. But it's encouraging to see, for example, the recent acquisition of Royal Bank by indigenous banks, that we seem to be moving in. If we had done a little more of that, the amalgamation, what it would have meant is that we would have been dealing with this crisis from a financial services level on a regional basis rather than an island by island basis, which it has been. There's always, you always wish you had done certain things, right. Electronic payments, digital currency, all these things, if they had been more advanced, would have made life a lot easier. Because one of the things that has come out in talking to a number of people, clients and otherwise, is the difficulty in making online payments overseas, not to established businesses, but to smaller traders and people that you need to pay. A lot of them don't even have bank accounts, which I believe would be probably a requirement if they wanted to get into that type of activity. There's a lot of that still has to be, because truly a community that can operate online, which is now we realize that's the way to go. What we can do now? Encouraging to see that the bank to get together with the governments, with ECCB, and come up with the arrangements that they did, and agreed in principle that they would all do the same thing. Some of the slight differences on a client-by-client basis. But what it showed you for the banks as a sector to be able to say that we'll give a 6-month moratorium with even potential extensions, right, was that there was sufficient liquidity in the system. Yes. And that's good, because I was reading St. Lucia's Economic and Social Research for 2019, and the 25. Well, I know that. the only they could have that is if parts the strength into this, that liquidity has Ram able to take part. Now is we can not talking about
Right.
banks have said come to more um, not only clients but more overdraft. At what point anymore? So we, um, this is a form of payment and get if people don't want to hold on to the bond for the year,
Right.
are the banks going to be able to offer services in that regard? So the banks are under more pressure than they may be right now, and even giving this moratorium. Because going forward, we haven't gone through the worst of it yet. We haven't hit the economic problems.
Correct. Mm-hmm.
And so, you're going to find that they are going to have to step up to the plate, working along with the governments and the central bank and hopefully multilaterals to find ways of maintaining the level of liquidity so that they can make it easier for individuals and for companies to have the disposable income, and they have the wherewithal to continue their businesses during this difficult period.
Okay. I believe that we are joined by our virtual panel members. Do we have Michael and Christopher on?
Yes, we're back.
Yes, we're back. I'm back.
Great, thank you. Michael, this question is going to come at you from the standpoint and taking from where Richard just left off in terms of the bank's ability to continue with the moratorium offer should this COVID crisis not pass us as quickly or as efficiently as we are hoping that we can address it. Are the banks in a position now to provide an extension on the moratoriums should this become a need?
Right. So at this point in time, the banks would be in a position. It's obviously a position that we're going to have to continue to assess. As Richard alluded to just now, we obviously decided to take a sort of a macro approach towards the response when we did so a few months ago. But there will become a time where we will have to look at other options. So at this point in time, we believe if we need to extend for a further 3 to 6 months, that might be in order. But beyond that, we'll have to look at other options in terms of restructuring the loans as they are and working out arrangements going forward. I think it's important to recognize as well that all of the banks are adequately capitalized. As mentioned before, there's a vast amount of liquidity in the system. And that really speaks to the strength of the banking sector today. We are resilient regions. We've weathered many storms. The banking sector is strong, continues to be strong. And, the point was made earlier, I think it was noted that there was, a call for accrued interest to be waived altogether. And this is one of the reasons that would not be preferable, because, the banks need to continue to be strong in terms of the profitability and the capital base as we go forward. So I think it's important to recognize that will continue for some time. The banks, as you know, forms the pillar of most of our communities, the financial pillar of most of our communities. So we need to be in a position to be able to support our economies, our personal customers, business customers, and governments. So I think we will require the brightest of minds in our regions to come together to think and we craft our strategy towards the recovery. But I think in terms of the downturn, obviously, the longer the downturn persists, the more challenging it becomes to sustain that support. But however, I do believe that together with the central bank and other international financial institutions, we will have the resilience, we will have the capital base, and we will have the support systems in place to continue to be able to support our clients and our customers throughout the region.
Okay, great. Thank you for that, Michael. And now, Thaddeus, you've been sitting patiently waiting for your turn, and here we go. So, perhaps what I should be asking you, and this is going to go to Chris Luard if he's on immediately after, is really from a legislative perspective, what are some of the considerations of the allowances and legislative measures that we should, or the governments now should be considering to put in place for events such as this to assist in ensuring that we can recover very quickly and be able to enact legislation, to address situations like this?
The governments in the ECU region really have to work closely with the central bank. Being we have one monetary policy, because essentially it comes down to banking, and as Chris spoke about earlier, resilience and financial resilience. Mm-hmm. And I think it should really be led by the central bank. And the central bank has gotten great powers under the Banking Act, and they could certainly work with governments who's part of the whole monetary policy to put in place legislation to assist the central bank and the local banks in going forward in preparing for such eventualities. One of the things that comes to mind is the issue of foreclosure. We spoke about liquidity early on, and the banks do have liquidity right now. But one of the things the banks have been suffering from is the non-productive loans, and having a mechanism now to realize the security from those loans. Because when you have a heavy non-productive loan portfolio, it affects your liquidity. And banks have to find a way to offload those bad loans and turn them into monies that they took from depositors. The thing about it is that in the Caribbean, we don't have a secondary market, and that affects us immensely. So again, central bank has to come in with that. Central bank a few years ago came up with and Richard was certainly part of that panel as well, which I was part of. They came up with a model where they would be buying the bad debts from the bank, but they seem to have gone more of a commercial way with that. But they need to find another mechanism, because we don't have a secondary market, to take off the smaller bad loans off the banks, to allow them more room to maneuver. And certainly they would need the banks, the government to assist with that. I co-chaired with a project from the ECCB along with the World Bank in setting up a foreclosure legislation. Now that has been stuck with some of the governments in the Caribbean. It's certainly been stuck with St. Lucia. And I understand why it's stuck, but at the same time, we can't be talking about resilience, financial resiliency with the banks, the strength of banks and the structures, and not allow the banks the opportunity to enforce their security in a more productive, a more timely manner. That needs to be done, and the government has to assist the banks in that respective.
Okay. And over to you, Chris. So the question then becomes, from a regulatory perspective, what sort of measures have been taken to allow the banks to be more responsive during a crisis like this? And also bearing in mind that we are also swiftly moving towards the hurricane season, again, which is predicted to be quite an active one, which may exacerbate the situation even more. Do we have Chris on?
Yes, I'm here, Wendy.
Okay, great.
I think, well, and I don't know how I speak after a lawyer on legal issues, but Thaddeus covered it in terms of the foreclosure legislation, so he's right. So in particular, there's some instances where there's significant non-performing loans. So, and Thaddeus mentioned several years ago, and the company still exists, is the Eastern Caribbean Asset Management Corporation. That still exists, and the main role was to help with the reduction of the NPLs in terms of purchasing of those loans and the underlying collateral, working them out. They have a much longer time horizon than the banks would, working those out. Thaddeus mentioned the commercial option. So they were, what we then said to the banks is that you can utilize the AMC, the Asset Management Corporation, or you can have, if there's a private company that comes to you to work out. And we are aware that there was one particular private company that was operating through the Caribbean and were purchasing these particular loans from banks. So that's one avenue. The other thing that we have done in terms of giving our banks some flexibility is as it relates to how they treat with these loans that may have to be restructured as a result of the impact of COVID-19. So under our rules, what we call our potential credit guidelines, there are certain limits to restructuring loans. So if it's a commercial loan, the rule normally says that you cannot restructure a commercial loan more than twice over the life of the loan. If it's a household loan, should not be restructured more than twice in a 5-year period. What we have said, if a loan has to be restructured as a result of COVID-19, we will not consider that under the terms of the rule. So we've offered the banks that flexibility to work with their customers to negotiate and renegotiate the terms of the loan. That's one area. Another area we're looking at, because you can imagine with this economic shock, the COVID-19 shock, there's some potential for an increase in credit risk. If the economies don't turn around quickly, and we have a protracted downturn in the economy, it would have an impact on small business and households. So there's a strong likelihood that there will be an increase in credit risk, and which would then see an increase in non-performing loans. So what we are now working with and having conversations with our banks in seeing how we can then, through the application of the accounting standards, and particularly there's a standard we call IFRS 9, and how we then can issue some more specific guidance to assist our banks in terms of addressing those, with a discussion with our audit firms, the central bank and the commercial banks. So those are some of the areas that we are looking at.
Thank you for that. Richard, when you answered earlier, you alluded to the issue of bonds. And we know that St. Lucia kind of led that whole thought process about using bonds as means of part payment to civil servants. And we've recognized Trinidad has to some extent implemented the use of bonds from a different perspective. They do a rebate on VAT to their commercial business houses. We know that there are a couple of the other islands who are beginning to have exploratory discussions around bonds. Can you guide us a little bit in terms of your thoughts on how this will translate to daily commerce? What would be the impact on using bonds as part payment?
Well, it's been done before. In fact, I can remember in 1979, when we got our independence, there was a lot of instability about the civil servants wanting increases at the time. And when the Labour Party came into power, and having promised to give it to them, they gave it the increase by way of bonds. The problem is we don't really have, let's just say, a very active market at a national level, even at a regional level, in which people can trade these. So that if you got a bond in return for payment or part of your salary or whatever, and you prefer to have cash because you needed to pay something and you didn't want to you couldn't really use your bond to pay. It's not that easy to simply go down to a market that would basically take your bond at face value or with a slight discount and then cash it in, which is what a lot of people might do if they wanted to be more liquid. So it would be informal markets. It's not impossible. It's not that difficult to do it. In fact, back in 1979, Elwin Marcelin was one of the few companies that was doing it. So some of the private sector companies were actually doing it. But if we're going to be faced, not just now, but with a prolonged period whereby governments have to use the issuance of bonds to deal with their liabilities. Prime Minister was saying today that they were able to pay salaries by not paying bills. So now they've racked up $70 million of liabilities. But if we're getting into that type of situation, then we have to have an active market where people know, A, the bond is good, and you're not going to get a haircut if you go and try and cash in your bond for something else. B, that you can get it done quickly so that you're not going to take days for a process for your bond to be realized in cash. And see that you're not the only one. Because at the end of the day, while a bond may be good, whether it's payable in a year's time, and 3% is not a bad rate because the rate of inflation is less than 1%, at the end of the day, people need cash to do certain things. And so from that point of view, using the bonds as a payment is not going to work for everybody. There has to be in the system a certain amount of liquidity and turnover in order to make it active. But there's space in there for using bonds. And so even using the electronic and digital currencies and what, you can now see how all of that can come into play. By using bonds that way. But there are some legal issues involved in all of that. There are some other difficulties. And again, it would really make sense if we could do it on a regional basis and not just be restricted to a national basis, because St. Lucia bonds may be fine. maybe people are not happy with another country's bonds. But if we're doing it on a regional basis, and you knew that when the bonds were issued, this was an OECS bond, it would make it that much easier to make it. It has to be convertible at the end of the day.
Excellent. That's a very good point that perhaps we can, I think someone alluded to the brightest minds in the Caribbean region finding the way to chart our way forward and out of this COVID crisis, and maybe that's one of those things we need to take a look at. I know that time is quickly approaching to us wrapping up, and so I want to leave this final question with Michael Spencer. Michael, we've heard a lot of talk about the impact of the tourism sector and the fact that we are very heavily dependent across the region on the tourism dollar. What is the approach towards the SMEs in the countries at this time? Is there a difference in thought in terms of how we would finance, how we would deal with SMEs and promoting same to make it more favorable for them?
Thanks, Wendy. Well, SMEs present an interesting case for the industry and represent, as we all know, a major function of the general business and finance markets in the region. The economic and banking importance of the small and medium-sized sectors, they're well recognized, and it's acknowledged that these sectors may be underserved, especially in terms of finance. And this really is due in large part to the risk profiles, as they may be higher and they may require more financial guidance and stewardship in terms of seeking access to finance. I think a lot of our small and medium-sized enterprises, there's a little more structure that's required in terms of the preparation of business plans and financial statements and the like. And I know that, throughout the ECCU, there are various government agencies that could assist with this. The SMEs are an important part of our community, and banks, as a banking sector, we do recognize that. To the extent that some banks have actually developed SME units with dedicated officers to serve the sector. I think for SMEs, communication is key. We need to ensure that they know who to contact for what. I think they need to be provided with access to finance. Some of their projects would be a little bit more risky in terms of the lack of financial discipline, as I mentioned before. But that is not to say that they should not be funded. So we have to find a way to assist our SMEs, and I know a lot of the banking community are trying to find ways to do that. There are presently some tools being implemented as we speak that will seek to provide greater access to finance for SMEs. I would like to mention at this point the Eastern Caribbean Partial Credit Guarantee Corporation, which has been launched, and they're just about to embark on a pilot in St. Kitts. And this corporation will provide guarantees to commercial banks and development banks as well for loans that will be granted to SMEs. And these loans would be considered to be a little bit, a bit more high risk. They may not have sufficient collateral. So essentially, the corporation will guarantee these loans to commercial banks so that the risk is shared, thereby providing the SME with greater access to financing. So I think it's an important sector. The SMEs are, form the engine of most of our economies, small businesses. And if we are to survive, especially at this time, we need to support those businesses so that they could grow, thrive, and prosper in the years ahead. I mean, we in terms of considering recovery options for economies, you mentioned tourism, but I think most of our economies, we are going to have to seek to diversify away from tourism and find ways to do that. And it's only through our SMEs and various business ventures that persons might wish to form and industries that persons might wish to get into, that will become possible. So the banking sector will have to support the SMEs, and we, as I said, the credit guarantees is a tool that could be used, and we're hoping that could be used across the region to be able to support our SMEs to help them to grow and thrive even through this crisis.
Excellent. Thank you so much. Noting that we are under severe time constraints, and I'm sure that the wider public will agree that there's still a lot more that we have to come together to discuss. And certainly we hope that at the Caribbean Association of Banks we can continue to facilitate discussions such as this. So for our two physical panelists joining me in studio this evening, I will leave you each 20 seconds to do your final wrap-up thoughts, and then we say goodnight and thank you for allowing us into your homes. Richard?
Thank you, Wendy. I just got an email there that told me that maybe there were some audio issues, so I'm going to try and ensure that they aren't. As catastrophic as this virus has been, it offers a moment of reflection. Mm-hmm. In medicine, pathology provides insights as to how the body functions, what happens when something interferes with it. We're now gaining some keen insights out of both of politics, our economy, in all our sectors, as to how it's been working and what needs to be done. And a picture is emerging of what needs to change. And what is clear that the banking sector is not immune from that, and there are some good lessons that might come out of this that make functioning fairly good. So I think in the future, looking forward, what I think most people in the private sector would like to see as to not exchanging information with the NPLs or anything else like that. And we'd like to see a little more of information coming from the banks, for example, on this very exercise you're going through as to how it's working and talking as a whole as an individual bank. See a little more movement towards amalgamation so we become truly regional with our indigenous banks. And that can be done in a number of ways, and so it's not just one model. I think Thaddeus talked a little bit about NPLs and the problems with loans that were going bad. We have a need for an insolvency legislation that allows third parties to come in and work out situations. People are scared of it. Politicians are scared of it because they think that it's giving banks the right to come and seize and sell your assets. And a good insolvency legislation, as we now have, does not do that. It allows trustees, third parties to come and work with creditors, work with banks, work with the debtors, and come up with solutions that will allow people to carry on, even if everybody has to take a haircut at the end of the day. And also we need to introduce this whole concept of being able to use movable assets as security, so that in fact more and more people can come into the system, can borrow against assets that traditionally they could not borrow against. So I'm hoping that this is something that will come out of this, that we can work on, and that in fact coming out hopefully of this crisis, that we will be much stronger, more resilient.
Absolutely. Thank you so much. Very well said, Richard. Thaddeus, over to you.
So we spoke about resilience. It's important that there are lots of legislation out there which are not enforced. So Richard spoke about the movable assets. Also, we talk about the movable assets legislation as well. And we talk about digital age, a virtual economy, but we have issues of different licenses issues. We have data protection laws, electronic laws, all need to be put in place to support the banks and support the digital economy. I see to the customers and the banks, moratoriums have been granted, but please ensure that you understand from both ends how it works. I say to customers, get advice from your banking officer. If you could manage to pay the interest, because you're only kicking down the debt down, and it's going to be much harder for you going forward. So bear all that in mind.
Okay, well, thank you so much, Thaddeus. Thank you, Richard. Thank you, Christopher. And thank you so much, Michael, for joining us this evening. And to our viewers out there, thank you as well for your questions. We hope that we've been able to bring some form of clarity. The Caribbean Association of Banks remains poised to continue to be an information provider. And in that light, we believe that this will be the first of a number of series, podcasts, televised sessions such as these, to ensure that we bring information to you. So please keep the questions coming and keep your interest up. Thank you again, and have a pleasant evening, everyone.